Great and beautiful morning, afternoon, and evening to you, wherever you are joining me at this moment. So, welcome to 193 edition of Investdata Trading Academy live with Ambrose. I'll say the market globally is a bit flat, in expectation of almighty Fed, almighty inflation figure. That means a consumer price index for US. Don't forget that I always say that US is like a pace sister data as when it comes to either rate adjustment or what is happening in terms of their macroeconomic data has the way of influencing other domain or other economy of the world. That is why as we speak now, the financial market is relatively flat this morning just because of what they are all eyes and what are on this December inflation data that is supposed to be being the domain or supposed to be released today from their own statistics like ours. All eyes are on this data this morning. Investors around the globe are gearing up to what to see this figure because it has a way of influencing decision of what effect. When I mention Fed, think like that is like our own monetary policy committee. Their chairman also will be talking after seeing this figure because in their next meeting, the figure that come today will also kind of signal or indicate what's likely to happen. If they continue to slow down the rate hike, this is a function of inflation figure that we're seeing today. Like I said yesterday, that in that matured market, we're seeing how market responded positively to that inflation figure. Anytime it comes and it slows down, market will that domain always look up. But where I am also not too in support what their analysts are both here and market are projecting that yes, that inflation figure or price pressure is expected to ease further in this month of December. Don't forget that December is the peak of what of festive period and many consumption and prices will go because of when there's high demand. Also, there's what price to be price. Don't forget that yes, we say that the crude oil price that have been kind of a major factor that have kind of driven price to where it is because as a result of Ukraine and Russia conflict has kind of remained below $80 for a while and which also were toward that period of December. But I believe that the oscillation in that price also have been but because of the consumption pattern in that festive period, I believe that if there will be any decline, I suppose to see that a flat from what we saw in November. But I can see that many, even big banks across the globe are saying that they expect to see a slowdown. Fine, but here in Nigeria, I'm not subscribed to that. Next week, we're looking to forward to see our own no inflation data that want to see a slowdown. Because don't forget that it is this month of December last year we saw kind of a drastic rise in fuel price and which directly will impact cost of transportation. That also reflects on what on the price of gas. That don't forget also that because the peak of the season for festive period, demand was high, and for that people were still moving, and this cost has the work also. For me, I don't see inflation slowing down here in our own domain. But as they say in the US, it might likely because they understand that. But I believe that because of the festive period being the peak, if you are telling me that we're going to expect a slowdown in inflation in the month of January, because I'll tell you after expenses in January, a lot of low buying pressure now to speak. No price, no pressure on price now because of demand is not there. People are waiting to receive again because they are all spend what they've earned for the year during that period. For me, that is what about. If it goes by what the US economists and also analysts are forecasting and banks are saying, that would be a good one because it has a way of traveling down to what to other markets of the world. But that is a good thing. But as we speak now, if you look at the figure that we're seeing that they are being projected, we're seeing that most of the analysts there are saying that for inflation figure in US are likely to slow down to around down to around 6.5. And if that happens, that will also be good from 14 from 7.1 in November to around 6.5, in December. Fine. And why the energy, aspect of it, which don't forget that food price and energy prices are too volatile. That one was projected also to slow down to around 5.7 from 6%. You can see, but I personally, because it just mentioned it, food and what and energy, I can see part here in Nigeria. We can't see anything because during that December, we saw a lot of queue, here and there, and also prices were up, transportation was up. And I know people that were traveling from Lagos to Delta will tell you they haven't paid 20,000 naira. We use less than 4,000 naira to travel before. You can see what because for me, I don't see inflation slowing down in our market. That is why if you look, when I come to our market, let me finish what I'm doing in the global scene. Then, as we speak now, I'll tell you that from what we're seeing for China figure that were also released, we saw that in China, inflation also maintained an uptrend, from to 1.8% in December from 1.6 no no from 1.6. No, for me, this tells you that no, as they are opening up their data, their borders and all stuff, that also put a pressure on their price, which is good because don't forget that because of COVID-19 restriction, that economy has a bit slowed down. But now they have open border, you can see what is also reflecting on what on the prices of what of crude oil. What is happening crude oil price today? You can see despite the huge kind of storage or inventory that we're seeing that in US, but because of the open of China border, can see that demand have also stabilized. China demand has also stabilized price in up direction. So speak now, crude oil is trading around the around the 83.42. Can tell you this is a good rebound from as low as almost 78 to almost 83. Can see that the open of China border and also kind of activities, business activity, productivity coming up in that environment has also changed the demand for what for oil, and that has the also impacting on this oil price, and that also will influence inflation, also movement of goods and services, especially also the capital market or price of equity anywhere in the world because of what those companies that are into energy business have done well in the previous year 2020, 2022 with the movement we are seeing now, and also the prediction coming from also all this war or big banks projection that oil price is also likely to go back to above $100. That also indirectly tell you that also inflation will also go up again because if oil price is going to go, energy has a way of also affecting price of goods. That's why relative that we have seen oil remain a bit below 80. We have seen how most of across the globe we have seen a slowdown in terms of what in terms of inflation. For me, it's also a good one for the economy around the globe, and that's why fear of recession is also it has been there because of high but continuous hiking rate. But if at the end that all eyes are now on the outcome of the CIP consumer price index for, and also the earnings that are also coming to be also a guide for investors to what to do. I believe that this is a big thing for investors because this guide will go a long way to tell them what to do exactly. Because I believe that this earnings that will come will change also the face of the market, knowing that this also a reward period for most of us, especially our market here, and also in that matured market, our eyes are what on earnings, and as they come, that also has the way of what also influencing the market positively. Like I said, that markets across the globe are flat and green. None of them is in red now. As we speak, the US is in green, but I'll tell you the green is not much because all eyes are still what on the inflation data. Also in Europe, we are seeing also that market there has opened, on a higher note, as we speak, on the strength of what? On the strength of more corporate earnings from the retail sector, and ahead of the key inflation figure that what we're expecting today. That also are supporting the market there. And don't forget that the economic data also that came from other, countries that make up the zone are also positive at this point. That's also, I said earlier, oil also impacting. But if you look at the Asian market also trying to oscillate. But I'll tell you, this is the little time we're seeing a kind of a little pullback, all in the name of waiting for to see this figure. The 7 months high in that market is just going down a little, go up, down, just to see the outcome of or to see the data that will come from. Don't forget that this has the way of also changing, like I said earlier, even in Japan, all eyes are still on this data to see what will come out of it. That's what I could guide investors in their investment decision. For me, the market is still very okay. In Africa, Africa is not left out. Africa was seeing a mixed market. But why here in our market here, we're seeing that our market is flat at this time. Market is very flat now. Marginally red around the negative 0.01. You can see that the market is on a just in a short flat note now. Let me put that one, but slightly in red, but not in green. But we are seeing a kind of improvement, in in what we call the market breadth. You can see that more gainers are there than losers this hour. But I believe that as we see more stock gaining, that also reflect on this. on the price we're going to see going into the day. I know that yes, the midday, but we're still expecting that market will still respond positively as we're seeing more stock on the gainer start. Like I said, today we'll be looking at your strategy. We discussed at the beginning of this week. We look at the planning, having a plan, a roadmap to guide you this year. At the same time, the tools you need also to trade successfully as a trader or investor. On that side, is very, very important is what I'm going to discuss now, strategy. Strategy is very, very key at this point in the market environment, because it is that strategy that you use to determine what to come to you. And I said earlier that we are all in the same market, in the market with different words, with different objectives, and that objective also help you to form a strategy to achieve that. Step to step how to achieve. That's why I have two broad strategies that many people follow, but for we that are Investdata, the one we follow also will be discussed here either today or next week. But I want to give you the two broad strategy that most people use in the market, and they have different direction, and you can equally do the two also if you are smart enough. Now here we're talking about buy and hold, and what we call a consistent growth strategy. The buy and hold strategy has been an old strategy that has come with the market for a long time. That thinking that the market is a long-term vehicle that you can think long. And that is why most people that approach their stockbrokers, they buy me stock for dividend. Why those that are smart enough, we call them smart investor traders, or call them short-term traders, are also taking advantage of what momentum and trend that changes in the market, because market moves in phases and also in cycle. Those that understand this up and down in the market, the uptime and the downtime in the market, know how to take advantage of it. Why those that are buy and hold will see their fund go, their investment appreciate, come down, or the name they want to go for dividend alone, or they are long-term investor, they want to accumulate more. But these two investments, they are not totally bad, but for those that really want to grow their wealth and understand the market, I think the consistent growth strategy is more applicable. That is where technicians or technical traders take advantage of what the psyche of the people, the momentum, the perception, the trend that we have also discussed here, to buy into what into position. But today, like I said, the buy and hold are those that think for long term, and most time they go for value stock. And this value stock, whether blue chips, defensive stock, is good. And when they buy, they wait to whether the price will go up for a long time. Some are buying for dividend, and that they do it mainly or what on fundamental alone. And that fundamental alone is that the company earning is good, or the sector is operating is good, or their broker or advisor will tell them this company is good due to what their business model. They buy into it and they hold. But for those that are doing a consistent, growth strategy, are those that are in the market to make money. They go in and out, whether for a short time, for they can do day trading, they can do weekly trade, they can do monthly, they can do quarterly, but they are in the market in and out, show opportunity, they go in and come out, they try to turn them. Yes, there's risk involved because nobody has 100% no prediction or no direction of the market. But if you are using your tools that I discussed yesterday, your tools will guide you. If your tools guiding you, you'll be able to manage risk, manage your fund, and at the same time manage what where the market is going. Yes, you might not get 100% because nobody has 100% control apart from God. But I think with the knowledge you have and with these tools, you're able to know in and out. Example I will give for those that really attended Invest 2022, in 2021, December 4th, we took position for the year 2022. But before, from March, most of the target for March for 2023 has been kind of achieved. But because of the economic market is doing well, interest rate was relatively low. Market was going on until May, when the Nigeria CBN or Central Bank or monetary policy joined the global, World Bank to continue to work to high rate. That changed the face of the market. For those that have achieved 100%, 180, 60%, the market has to bring them. But yes, at the end of the day, they closed the year in a positive note. But it would have been better when you have sold and come and buy. That is what I mean. For those that I want to do consistent growth strategy, you must know how to combine your word, your technical and your fundamental. For those that are using a buy and hold, like today now, you can see that many stockbroking firms, because they too, they are not so looking the market in one way. They are not using combining to let you know, unless for their own battery account that they can see their trading in and out. But if you look at what they choke out at the end of the day or the week or the year, that this stock position just for 1 year, automatically that psychology of buy and hold is what they are promoting. Even though they are for the big names in the stock market, they do a prediction for 1 year, buy the stock and here. And also if you go somebody that also give you target and they likely no profit to attain. You can see that there are some are less, some are big, but you can see that at the end of the day, which one you get to that level. But if you understand how to manage your investment, that is why those that took advantage of the bumble car park was selling, that we invest that we use what we call the consistent growth strategy, because we combine fundamental and technicals to give signal, and that signal is what you need to work to go in and out. As you are buying, you know your stop loss, you know your profit target, you know your buy range, and also at the same time, once you get that, you've alerted what to sell. You can do it, in a quarter 2 times, in a year more than 4 times. Than the person that is buying and hold, and those stocks go up and come down, you are better off. Why I said this strategy of consistent growth strategy is better, because one, in summary, event that buy and sell signal is effective way of what for investors to generate wealth, and also manage risk by using technical analysis to identify the rising assets, the rising asset, and at the same time to implement position and manage what risk I've said earlier. These are the strategy investors can easily achieve above average returns while minimizing what risk. This is the purpose of this of the park. And that's why Investdata buy and sell signal has been in existence for almost 7 years. Every day we're fighting to bring in more technical to give us signals on how to take it right and be above the market. And you can see our buy and sell signal, and even our year forecast that check. It's only a few times that we are below the market, and we are beat the market at average, and also investors are in for it, smiling for it. You need to also up your game to know why in the market and know the strategy that work for you. And also you can do the two, buy and hold, and also consistent growth strategy. Why I say so? If you are making money in your consistent growth strategy, that is for trading, you can also be buying long-term stock that you see that yes, you understand their business model, the sector where they are, and they are selling at a discount that they have potential to go up. That time you are also saving. Yes, what we are getting on in the process, you are building your portfolio, and you are seeing your wealth generation is increasing because you are creating wealth with knowledge. This is how to also invest this time. I don't want us to just allow the market to toast us up and down, carry us up and bring us down. That is why I started the year with what with plan. Also, I've discussed the tools you need, which I told you that for you to successfully combine fundamental and technical, you must have your tools, and these tools will guide you. That is why you have your charts that I've sent it discussed yesterday. Today we are discussing strategy. You can see how I've discussed the strategy this morning. You must have the strategy that you want to follow. If you are targeting those value stock to buy and hold, fine. And also in the new packet jumbo pack, and also the Investdata buy and sell signal, you have stocks for dividend, you have stocks for what for capital appreciation. For those that are looking for weekly position, they are still there. Stock to buy and sell, they are available, so that if you are not subscribed, take advantage of it. I told you yesterday by Friday, Saturday here, by God's grace, we'll have a guest speaker that's going to take us on what how to trade any season for what for profitable return, despite what the volatile market and the uncertain market environment. This person who wants to be professional known in the market is going to discuss, so that after that class you can also go back and look at your portfolio. If you are those that are going to share how to do it, this is why I said it's not only just to participate, you must take action. That will make the difference. People will attend program either with us or other places. What makes difference that you take action, and that action also will also help you, to know where you are going. Yes, we'll draw a precaution here today and go forward to the live market to see what is happening in the market now as we speak. Is very, very important for us to know what is happening in the market. Once we're able to do that now, we can now say, yes, this is what is happening in the market, and you and I can take advantage of that once and for all. It's good for us to do that now. That's why let's go to the market and see what is happening in the market. And as we speak now, the market is also, for me, is still in that flat position. No market has also, like I said, that's why it's good to look at your chart. Like you can see from the chart now, the market has moved up this morning as we speak now. You can see that market is also trying to break out the next word resistance level. For me, it's a good one for the market now, and that means our market is looking good again, trying to extend what we saw yesterday. But in the morning, it was open as if there is no direction. But as we speak now, market has moved almost around the 51,886, which is good. Last thought it tested within it was 51,846. Now it's seen now 51,886. This is a good move for me this morning. That means market is in green, and it tells you that for those that are really sitting aside, this is time for you to also look the way of the market. Market is in green this morning. I'm not surprised. look at the event that happened, yesterday in the fixed income market, you can see that we saw a lot of fund chasing a few treasury bill offer at the option primary market yesterday. You can see over subscription at the short curve and the long curve. So look at the 91 days. We can see subscription about 2 billion was offered, almost 50 something million subscription was up they had, but before you can return the fund and all the stuff. But look at the end, the rate and the yield across the tenors, they were the decline. It tells you that this is a sign, and I said it. The first one we saw, the first savings bond we saw this year. You notice what was that the 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 rate also was down. This was another KGP, the same physical market was saying down in all the tenors. It is to give you a sign that even during last year December, so this market the fourth times was seeing a kind of percent decline in what in KGP. It tells you what is going to happen to the new year. Like I said yesterday, that many people are looking at government having a deficit budget and also high cost of servicing debt. I believe that what we are seeing now is a sign. Even at the coming MPC meeting, we might not see a kind of, even people are saying 50 basic point hike in rate. We might not be seeing 25, or they leave it flat as it is. Why I say so? Because the more you write a high rate, the more you are putting government in a high jump to service rate. Cost of borrowing will be high, and that's why when government said that even their borrowing is going to still remain in the I said yesterday CPN ways and means, says that they might not like to approach the market, and that means that CPN and system also have to manage inflation if they continue to also borrow that in that way to the government. But if they come back to the market at a high rate, I think they will clear out what the corporate bond and others participants, that will have another effect on the economy. But I believe that they will balance it. But because we are seeing consistent decline in the yield and rate in the physical market, and inflation figure, like I said earlier, that I don't see it slowing down for the month of December. By next week, this figure will be coming, and now that its rate is coming down, and see that this rate, people are entering into deeper negative return. But if inflation is going to go up, I believe that most of them are now in one single digit in terms of yield. But why in equity market, most stocks are still having a 2 digit yield for terms of dividend, and the time space or the time horizon or the time frame is shorter for you to to make return. As I said earlier in one of the class, that the average dividend yield in the market now is between 6.5 to 7.5, and why we are seeing 90 days for 91 days for the treasury bill is about 2%, while 82 days is 182 days about 4.30%, and the longer window or curve is around 7.45. You can see that it's declining. That's why I see that more fund will flow into equity space, especially those blue chips company and dividend paying stocks that have been consistent in their dividend payment, and their earnings at the third quarter have given sign that this company will sustain their payout. That's why I said invest rather in the market. Don't need to panic, but rather keep your eyes in the market. Also, where you have made profit, don't be greedy. Take your profit and see the market. But for me, as market will break out 52,000 mark very soon, one that is done before end of the week, that also give you a clue where we are going as we are coming closer to next week, where we'll see more corporate earnings coming from the listed companies, especially on the listed account, and also seeing the inflation figure next week. That will also change the face of the market. But we are seeing a sign where we are going in terms of rate in the other fixed income market, other market that has another a plus for what for equity space. For me, let's keep our finger crossed in the market. Like I've said, we have 13 gainers at this hour and 8 losers. Leading the pack for the for the gainers are Ella Lake, Nansila Sako, Adova, can see Adova, Livestock, and Honeywell. These are the top 5 gainers. On the loser chart, you can see Abebe Building and also Tolerant. You can see we can see FTN Coco and the Mutual Benefit, and then the last one on top 5 is FBN Holding. But if you look at the in terms of activities volume, we can see that FBN Holding, GT Code, Royal Exchange, Abebe Building, and FTN Coco, these are the top in terms of volume. But I see that other stocks are still seeing volume. We're seeing volume in Dangote Sugar today. We're seeing volume also in Royal Exchange. We're seeing volume in Access Bank. But it's a good one. Like I said, all these are as we speak. Access Bank, GT Code, all of them are also in the among the 13 gainers that I've shown. Why? Those losers are still look after. That's why I said market in green this hour. For me, I'm not surprised. The market is also, like I said, up by 4%. up by 183.37 and 0.4% up is a good way that market is starting this morning. For me, it's a good way at this hour that people are seeing this kind of opportunity in the market. All we do, let's keep our finger crossed and hold our position. But before, because of our time, I have just drew this lines. This line here, the green ones here, are the what are the resistance line. I call it the resistance line because this is where we expect the stock to the chart, the price action or price structure to hit. Once it break out, then the strength is going. But because market is recovering from this level, most time as it comes to all these levels, it will form a topping position. That means where, but now you can see that market is already breaking out the recent resistance level of 51,846. That's what we now 51,886. It's possible before the market close today, we might also be touching 52 or almost 51,900. That would be 900 and something. That would be very nice at the end of the day. But we can see the region where the market one market breaks out the 52,000 mark. We're heading for another around 52.8. Then you can see over crossing to almost 53,500 before you can finally be looking at what the last peak that was around the 54. These are the journey so far. But let's quickly call our chart because of our time. Our strategy took us time, but we'll have time to make up tomorrow. But let's look at what the market is doing. Let's call our MACD up now. Very, very important. Moving money flow and our C line. C line has to be what? 8. Yes, if you look at our T line, you can see the market is above it. You can see how market has remained above the T line. This also give you a stronger confidence that I tell you the best way to look at when the market is above the T line or individual stock are above the line, there's no cause for alarm. That's why it continues even when it was delayed. You can see the red slight profit taking in different days. But this market remains strong. As I say, market is very, very resilient at this time. Of course, some factors are still behind the market. I don't mention one about the declining rate, and yield in the physical market, inflation figure at hand, and we're seeing to see Q4 number that also put a boost to them because it could give you insight to what we expect from it. This is why market remained at it. But yes, if you look at your MACD tell you that market is still yes. This rally might also be looking at because that's why I say that's why that MACD is a lack indicator, which I showed yesterday. You can see what is telling us here that the market is trying to become bearish because you can see that as the market is going up, there's a little divergence here. You can see that the histogram is coming down to almost a bearish situation while the market price action is going up. How to watch it out and look at. For quick one before that, let me call the stochastic oscillator because this is what will give you more confidence to see the strength of the market, the momentum behind the market. Once you have the momentum at your back, you are not afraid. But that's why I said, as investor, you know how to work, trader, know how to combine your position. Yes, you can see where the momentum is now. Momentum is trying to build up at this level, but as far as the market is remaining above the T line, there's no cause for that. Means any moment from now you see the market responding. And the good thing is that the money flow for the market remain around the 82 point. Yesterday closed around 83.03 yesterday, and we're seeing RSI looking at up around the 75.50 yesterday, which is also good for the market. Let's keep our finger crossed. This market is still very, very strong and still heading to somewhere along that is also make everyone want to smile in the market. Yes, quick one before because of our time. Let's see what is happening in two stock because our time is fast spent. In two stock, I have less than a minute or 2 minutes. But let me look at what is happening in Honeywell at the same time. Look at what is happening in GT Code. GT Code has failed to pull back despite the news of find that their London operation as the regulators they have slammed on them, but the stock revealed. I tell you that the momentum, the strength behind that stock is high. That's why I want to look at that GT Code and the livestock before we call it a day, just to see how market is responding to that. Because yesterday, even as the time it was going down in the morning, but very close at 24 naira, there's something is working for that stock. Want to see if that momentum still there. Yeah, this morning momentum is still strong. The stock have talked almost 24.15 this morning, but now it's flat at 24. You can see that yes, mark this also giving sign that of profit taking in this stock, and momentum is still coming down. But money flow remains strong above 80. For me, it's a good one. But keep our finger crossed on GTCO, and don't forget that the the result is around the corner, and because they are among the early filers, I feel that the banking stock will see their result before the end of February. That will be a plus for them. And people have also taken position if the dividend will come, and that dividend should not be below what 2 naira 80 kobo. If that is sustained, we'll see the stock also going. And that means your yield there, is like if you sell it for 24 naira, and and it's paying you, a dividend of 2 naira 80 kobo, you can see the yield you are having is almost 12% yield if it happens that way. These are the things that will sustain the price of the stock. You know that this is a marketable stock that is in banking sector where it is liquid, and anytime you want to sell, they are available for you to sell. Buyers are already there. These are the things you should also consider. Quick one, the last one, let's look at livestock. What is happening in livestock? See livestock bouncing back this morning. Is this sustainable? You want to ask yourself, is this livestock feed movement sustainable? You want to ask yourself, livestock is this sustainable? Let's look at it and wrap it up for the day. But let's look at it now to see the last talk we're chatting. Sorry for the time, because you know what, we did a lot of that things. Yes, if you look at the day chart for livestock, I can see a good technical position. And this is why I said, as a trader investor, you must know how to combine your fundamental and technical. And most time, the right price to buy, right price to sell, it depends on your fundamental, your technical analysis knowledge. And that's why I say, get your tools, get knowledge, and use it effectively. Now you can see that look at the livestock. Look at the chart now on a day chart. I'll tell you this is a good move. We're seeing a strong bullish candle here, green one here. But if you look at other indicators, they are confirming that strength is back. Momentum, you can see that they are moving the same. You can see that the MACD is becoming, histogram is becoming bullish very soon. Where it's going, you can see money flow is also a bit above a 50 point, and you can see momentum increasing in the stock for on a day chart. But if you really look at the 1 hour chart before we say finally buy for today. On the 1 hour chart, it maintains an uptrend. You can see that it's already bullish on the 1 hour chart, and money flow is looking up, and also momentum is very strong at this point. For me, I'll say thank you, and also look forward to see you tomorrow, and also on Q&A, which is the NGS Q&A with Ambrose on Saturday. Like I told you earlier, saying Alaji Kurufi is the guest speaker, and to take us on on how to trade with any season, in a volatile and uncertain market environment. You can see that there are some uncertainties surrounding the market this now. Despite that, there's still opportunity, and those stocks that you buy during the election period will also be discussed there. That's why you need to look forward to see, to join the class by Saturday. I look forward also to see you. Thank you, and enjoy the rest of your trading day. See you tomorrow.